Superficially, headline and trimmed mean inflation are both finally back inside the Reserve Bank of Australia's target band, based on the latest data from the ABS. The annual CPI inflation was 2.4% in the March quarter, unchanged from the December quarter. The trimmed mean was at 2.9%, down from 3.3% in the December quarter. But some important points to make about this result. First, of course, it means that prices do continue to rise, but at a lower rate than through the inflationary spike that we've had over the last 3 years. The cumulative effect are that prices remain substantially higher relative to incomes. And CPI does not include costs of land or mortgage repayments, and only a weak proxy for housing costs. Second, the government's support for energy, particularly electricity, has pulled the inflation measure lower than it would have otherwise been. The truth is, inflation would have been a lot higher if the government had not used taxpayer funds to subsidise electricity, and we see the impact of those subsidies rolling off as at the end of the Queensland rebate. No wonder both major parties ahead of the election committed to continue the taxpayer payouts to households. All taxpayers are bearing the high electricity costs via taxes on one hand, but are given back cash on the other, so it's a bit of a con, really. And in addition, the CPI weightings were revised this time around. The weighting for housing, which includes new dwelling costs and electricity, were adjusted down, meaning those elements had a lesser impact on the overall number. The ABS says the weight for the household group fell 0.35 percentage points. So although the underlying rate of 2.9% was higher than analysts were expecting, of course there were calls for the RBA to cut when it meets on May the 19th and 20th. Markets are tipping it, economists expect it, and corporate Australian households would probably welcome it. Bond traders are betting on a 25 basis point cut now. Earlier this month, though, they were pricing in a 50-50 chance of a jumbo cut after US President Donald Trump's sweeping tariffs threatened concerns about global growth. But the terminal rate and how quickly you get there is actually a battleground at the moment. Probably will get a cut in May, but don't expect too many after that until things are a bit clearer. And in the meantime, let's celebrate the fact that it's actually taxpayers who've actually paved the way for the inflationary result that we got, which was down, and the likelihood of an interest rate cut. So you could say that Chalmers' strategy actually has worked, but actually that means that debt will be higher, which is going to cost taxpayers more in the long run. So I'm not sure we have one really, but there you go. That's politics for you.